FedEx Freight just filed its first annual report as an independent company. $351 million of last year's pre-tax income came from a cash arrangement that closed 2 days before the year ended, not from moving freight, from its former parent. Operating income fell from $1.75 billion in fiscal 2024 to $1.4 billion in 2025 to $540 million in fiscal 2026, a 62% drop in a single year. $492 million of separation costs sit on the income statement as the obvious explanation. Here is the whole bridge. Revenue fell $97 million. Separation costs added $492 million. Everything else in the cost base added another $275 million. Total change, minus $864 million. Separation is 57% of it. It is not the whole story. Strip out every dollar of separation cost, and the operating ratio still went from 84.2 to 88.3. In less than truckload trucking, the operating ratio is the whole game. 4.1 points of deterioration on a clean basis. So where did that $275 million go? Salaries and benefits up $119 million, largely because over 1,500 employees transferred in from FedEx. Other operating costs up $92 million. Depreciation up $41. Fuel up $29. Maintenance actually fell $6 million. And purchase transportation did not move at all. Now the part almost nobody will read. FedEx Freight reported $344 million of non-operating income. $351 million of it is one line called Related Party Interest Income. That is interest FedEx paid FedEx Freight on cash it had swept out of the business. Note 10 says the arrangement was terminated on May 29, 2026. That single line is just under 40% of pre-tax income. It was $388 million the year before, and $330 million the year before that, so it flattered every year in the filing. Against it sits $57 million of interest expense, which covers less than 4 months of the new debt. Both sides of that are about to change. Cash tells the same story, harder. Cash from operations went from $1.53 billion to $167 million. After $379 million of capital spending, free cash flow was negative $212 million for the year. Most of that is one-time. The company bought back about $1 billion of its own receivables from FedEx when the factoring agreement ended. Receivables went from $132 million to $1.15 billion. What came with them was the credit risk. The allowance went from $14 million to $204 million, and the provision for credit losses went from $19 million to $91 million. Then there is the exit payment. In preparation for the spin, FedEx Freight issued $3.7 billion of senior unsecured notes and drew $600 million on a term loan. Substantially all of it funded a distribution of about $4.1 billion in cash to FedEx at closing. Here's the balance sheet the company woke up with. $4.53 billion of debt against negative $497 million of equity. Reported interest expense of $57 million becomes roughly $206 million a year at the disclosed weighted average rate of 4.79%. So what is it worth? No market price and no analyst estimate goes into this. Adjusted earnings before interest, taxes, depreciation, and amortization of $1.54 billion against net debt of $4.28 billion. At 8 times, the base case implies an enterprise value of $12.3 billion, and about $8 billion of that is left for equity. Across the full grid, the equity range runs from $4.1 billion to $14.5 billion. That width is the honest answer for a company with exactly one filing. The bottom line: separation costs explain 57% of the profit decline. The rest is a business whose costs grew $275 million, while revenue shrank and shipments fell 4%. Watch whether the adjusted operating ratio moves back toward 84 from 88.3. And note this, no analyst wrote this. Every number came out of the filing's own XBRL. And the same pipeline runs on any of the 10,000 companies that file with the SEC, or on a private company reporting in the same format. This entire analysis was built on the RoboSystems SEC shared repository. Structured filing data for every public company that files. Revenue, earnings, balance sheet, cash flow, segment breakdowns, all queryable, all from the original XBRL. If you want to run your own deep dives like this one, the link is in the description.